The Bank of Canada already cut interest rates twice this year. Another one happened today, September 4th, and it looks like more cuts are on the horizon for the rest of this year. Now, before we dive into this, don't forget to like and subscribe for more tips on Toronto real estate investing. Back in June, the overnight rate dropped from 5% to 4.75% and then down to 4.5% in July, and now it's at 4.25% as of September of 2024. Now, these cuts come after weaker inflation data. July's CPI was down to 2.5%, which is the closest we've gotten to Bank of Canada's 2% target in a very long time. Now, these days, we are more worried about whether our economy can achieve what we call a soft landing. And we are seeing monthly GDP growth turn negative, and there's a lot more focus on the labor market too, which seems to be weakening. So with all of this going on, it is likely that we are going to see more rate cuts. Most major banks are predicting 2 more cuts by the end of the year, one in October and one in December. And if that happens, then the interest rate could drop to 3.75% by the end of 2024, which would be the lowest it's been since December of 2022. So far, these rate cuts haven't made a huge difference in the real estate market. Toronto has been a buyer's market all summer long with more listings than sales, which has lowered prices for semi and detached houses. But with rates expected to drop further by the end of this year, we might see the Toronto real estate housing market start to heat up in the fall. Generally, real estate prices move in opposite directions of interest rates, and with 5 potential cuts in a year, that's a huge deal, and it could very likely boost how much you can afford by around 15%. There's also a chance that investors who have money in GICs might start to look for better returns, and real estate often becomes an attractive option, especially when prices tend to rise as interest rates fall. Honestly, there is more going for real estate compared to a year or 2 ago, but given how rates have been all over the place for the past couple of years, trying to time the market or bet on short-term price gains is still not the best idea. We still believe in holding onto real estate for the long haul, and focusing on rental income is the best way to go. And to make that easier, look for investments that at least break even on cash flow, and that is very doable in today's market. Just check out our team's deal of the week. This semi, listed for under $900,000 in Toronto with no offer date, needs around $100,000 of work. But after that, you could cash flow positive by close to $2,500 a month. But don't just hear it from us, go see it for yourself. And we have linked all the details in the pinned comment below. At the end of the day, a cash flowing property in a strong long-term market like Toronto is a solid investment no matter what happens to prices in the short term. And if rates continue to drop quickly, prices might even bounce back more quickly, and that is considered your bonus. So if you're thinking about investing in a multiplex in Toronto, we are here to help. Whether you want to invest in a ready-to-go multiplex or you're thinking about converting a single-family home into a multiplex, our real estate sales brokerage in Toronto can guide you through the entire process. Here's how it's like to work with us. First, we get to know your goals and then help you find great deals and eventually help you choose the best property for your needs. If you need renovations, we've got trusted contractors to help and we'll coach you along the way. Plus, we can handle renting out and managing your property too. So if you're ready to get started, just head over to this link here and let's chat.